But what I can help you guys out with is reading to you some news about Jackson Hole. Now, you probably heard the phrase Jackson Hole. You might not know what it is. We're going to dive into it really quickly. But briefly, Jackson Hole is an area in Wyoming where the Federal Reserve goes to do a yearly symposium where they make a lot of announcements. And right now, Jerome Powell, who is the chair of the Federal Reserve, will be doing an address to, well, the world from not Jackson Hole. We don't know because it's virtual this year as a result of that which shall not be named on YouTube. How Bitcoiners should watch the Fed's Jackson Hole Symposium. Fed Chair Jerome Powell is expected to address whether the U.S. Central Bank will taper its $120 billion a month worth of bond purchases. People are forgetting so quickly. We have such short attention spans because we have news that comes at us 24/7. We continuously forget things that are really important that are happening right under our noses. For example, we've had trillions of trillions of dollars of quantitative easing go through in the last just several months. And right now, we're still seeing $120 billion a month of bond buying. When Jerome Powell steps up to the podium Friday at the Federal Reserve's annual economic symposium, held virtually this year, but traditionally near Jackson Hole, Wyoming, he's likely to deliver a speech that has had many revisions in the past 2 months. While many market participants expect the Fed chair to announce a date and pace for tapering its $120 billion a month worth of bond purchases, the dominance of that which shall not be named makes such a pronouncement less certain, says some economists. I was expecting him to maybe announce plans for tapering, but the increase in that makes it less likely, said David Beckworth, former international economist at the U.S. Treasury Department. We know for certain that there's more caution, but the economy is still growing rapidly. Inflation is high, said Beckworth. Now, a senior member, you don't care. I think you can make a case for why they may still go ahead and taper. Here's the thing, guys. Bond buyback and bond buying and quantitative easing and all these different ways of injecting liquidity into the market is something that has been done for a very long time. It's not new. Now, there are a lot of people who tell you that QE started in the early 2000s, post the 2001 financial crisis after September 11th, and it's nonsense. QE in its current form, yes, is a relatively new concept, but the idea of a government using different mechanisms to inject money into an economy and inflate it so that they can buy things that are shiny and nice and new, like infrastructure, when they should have the money from their taxes to do so in the first place, is not new. The Roman Empire did it. The West African kingdoms did it. It happened in Polynesia. It happened in Israel. It happened in China. It's happening in America. It's happened in the European Union, where you're starting to see negative interest rates. It's happening all over the world, and it won't ever stop unless we have something like Bitcoin come in subversely, as Frederick Hayek talked about in 1978, and put a stop to it. This bond buying on the surface seems like a good thing because it can stimulate the economy by giving people more money to buy things with, because the way that we measure our economy is by how much money is transacted. That's why metrics are so important. The way we measure gross domestic product is by how much money changes hands. That is not the most important thing in an economy, because if you're just measuring how much money changes hands, then you're not measuring how much people are saving. Just think about taxes, for example. As a company, we want to build a big savings account, right? So that we can weather any crypto bear markets in the future. We're going to get taxed on a savings account because we're not spending the money. Everything in our current society is built around this concept of spend, 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 spend. Nothing incentivizes savings. And inflation like this does the exact same thing. It speaks to spend now, inject liquidity into the economy at the expense of the future because, I won't be in office to have to worry about it. Is the $120 billion worth of bonds buying going to get tapered? Frankly, I doubt it. We'll see what happens when the symposium happens. I think that it's ridiculous that it's gone on this long. Yes, the economy seems to be doing well. Inflation is absolutely destroying the U.S. dollar right now. It's not good for the United States of America. It's not good for the European Union and anywhere in the first world that holds U.S. dollar reserves. It's not good for the global economy. It's not good for saving money into the future. It's not a good climate to build a business in, and it is certainly not good for our future generations and even just the next 10 years of us having to deal with this, because like it or not, the U.S. dollar is still the penultimate currency in the world. That's why we're invested in Bitcoin.